Hello, Professor Chen. Today, my group and I will present an interesting alternative financial method for agriculture, peer-to-peer lending. Our group is made of Ms. Evelyn, Ms. Chunyun, Mr. Parama, and myself, Rodrigo. The outline of our presentation is the following. First, I will give you a background of peer-to-peer lending, but before that, I would like to give you an outlook of the agricultural industry. Then we will introduce peer-to-peer lending and its application in agriculture. And we will also share some successful cases of peer-to-peer lending in agriculture. And finally, we will comment on the bright future that lays ahead for this innovative financial alternative. Please allow me to start with giving you a global outlook of the agricultural industry. You might have heard that the United Nations estimates that the global population will be roughly 9.2 billion people by 2050. This is 1.5 billion more people than we have right now, and agriculture is expected to meet all the needs of these people. But our current agricultural practices are not sustainable in the long run, and it is unlikely that we will be able to meet this demand without any change. Innovation is needed to improve agricultural productivity. This means we need to produce more with less. And there are great ideas that are coming up to solve this challenge. But the truth is that the development and implementation of these new ideas require investment. However, traditionally, farmers have had little or no access to formal financial institutions or adequate financial services. This is because, on the one hand, banks lack familiarity with the needs of the agricultural sector. They perceive agriculture as a risky investment, and in addition to this, their processing times are too long and not suitable for agrarian needs. On the other hand, farmers usually live in remote areas, making it hard for them to have access to financial resources, and they typically have no access to proper training, which could lead to improper implementation of their farming resources. The sum of these circumstances generates the perfect environment for the application of two alternative financing methods, crowdfunding and peer-to-peer lending. To define them, I will start by pointing out their similarities. Both of them work by enabling individuals to obtain funding directly from other individuals without the need for traditional banks. They are both quite convenient to work with, primarily through online platforms, and they have been around long enough to be regulated by financial authorities. On the other hand, there are few things that differentiate them one another. When it comes to the nature of the investment, peer-to-peer lending is a loan. The borrower will repay the money plus interest, but in the case of crowdfunding, investors receive an equity share in the project they back. In agriculture, this could be translated to owning a part of the farmland. In peer-to-peer lending, there is a fixed rate of return and a pre-established end period. But in crowdfunding, the profits rely on how well the investment performs, and it can last as long as the investor holds shares on it. Finally, there are no accreditations needed for whoever wants to invest in peer-to-peer lending in agriculture, but in most cases, crowdfunding shareholders need to be accredited investors. This brings us to the conclusion that peer-to-peer lending is the better option for small investors. With peer-to-peer lending, individuals who want to start investing can get better returns. And for farmers, this is a faster and more flexible way to obtain funding. Now, my partner Evelyn will give us a detailed introduction to peer-to-peer lending in agriculture. Thank you very much.
Okay, thanks for Rodrigo's share, and I will introduce the difference of the P2P lending for agriculture between the traditional business and the innovation models, and how it works. First, as you can see that for the original model of the lending system in agriculture, the investors invest their money to the bank and the bank lend the money to the farmers. Now the whole process will be more easier, just a simple and direct process with the middle bank, only farmers and investors. And second, in the prior, there are three sides, which are banks, Investors, farmers, all will suffer a high risk because farmers have to contend with unpredictable yields, weather, pests, and so on. There are many factors affect the harvest. So, under this situation, banks also suffer the risk to lose the money. And for investors, they may in a black box and do not know where their money go and they may invest very much in one time. Moreover, they have limited options to choose. For every field, maybe they just can see one or two. But now there are just two main sides, farmers and investors. Both sides will afford low risk. For farmers, with the help of the platform, they may get more easier to access to the main business market, improving their harvest. For investors, they can clearly know that's where their money go and what they choose. And they may just spend very little in different projects, which will suffer low risk. In the end, under the above changes, the main difficulty for the farmers have been solved, which means that they can borrow money easier. And you may want to know how it works. For most of the modes, there is a four-step circle. As you can see that the first step is funding. For the investors, they may click the link in the platform to invest in the agriculture project. And how does it look like? And you can see that there are many options like chickens, potatoes, tomatoes, eggs, or something, whatever you are interested in. And when you click in, there are more specific informations. This is the yield rates mainly higher than the market rates, and this is the return period, end of the period, and or monthly. And moreover, actually P2P lending can cover different skills. It may mainly focus on the small and medium skills. Of course, it can cover some larger skills. This example shows that maybe the contract period is 18 years and it may belong to large skills. But for details, you can see that investors and lenders varies in terms of the skills. For example, there are many investors who only have $10 at their pocket money, where others have several companies and able to invest 1,000 easily. The platform is to connect lenders with the appreciated investors. By only displaying the project on the website maybe is not enough to attract customers. That is how P2P lending channel works with the help of the machine learning algorithm to give a recommendation that can match every skill of the business with the project who need funding. The result is that the investors could get suitable project recommendations and minimize the risk, and the farmers could get the benefits of fire loan scheme, risk score, and higher probability to receive the funding. P2P lending could accommodate different needs of investors with the probability of the projects, but only a few, maybe 1 out of 100, could accommodate a large-scale project. As we mentioned in the previous slide, larger scale projects need other channels for funding, such as equity financing, issuing corporate bonds, something like that. And then the next stage is the cultivation. For each project, together with the farmers, they ran the cultivation projects for from the fundings. And next is the harvest. The platform helps farmers sell their cultivation projects after the crop has harvested. And the last stage is the profit sharing. After the harvest is over, the investors can enjoy the benefits of the funds they deposited. That is a good circle for the operations. Actually, P2P lending have many practice all over the world. And next, we will welcome Parama to introduce the details of the practice.
Okay, so thank you, Rodrigo, for convincing us about how peer-to-peer lending could transform the funding scheme in agriculture. And thank you, Sijia, for explaining how peer-to-peer lending works. Different countries operate differently in terms of financial and agriculture sectors. I would like to pick some example from some most prominent countries in terms of crop yields and how the peer-to-peer lending works. The first one is from Africa. We have Crowd, a peer-to-peer lending based in Nairobi, Kenya. It's a it's collect fundings from all over the world so the investor could invest whether in euro, pound sterling, or even USD, and the money in the wallet can be transferred to any bank across the world. This agreement is secured in a smart contract blockchain system and also with cashless process. Indonesia have several agriculture peer-to-peer lending. One of them is Crowdy. This platform uses third party to help to assess whether farmers' crop products on the field is able to receive funding and if they are able to return it. So after the harvest, this platform also provide marketplace so that the farmers could sell the end product directly to the customers. And it's already maintained by the Indonesian Monetary Equity. Move to China, we have Demo Hour. This platform is not limited to agriculture though. Many people share their innovation, cultural, and also technological activities and projects in the platform. So it's a reward-based peer-to-peer lending, similar to Kickstarters. People can post their project and receive funding from the public without any obligation to return the money back. It's similar to Kickstarter in US and is regulated under the Securities Association of China. While in Brazil, we have Mutual, a peer-to-peer lending market that provides risk rate assessment for each project so that the investor could assess the risk and the potential gain of each project. Usually, it's high risk, high return. Similar to Demo and Kickstarter, every user could share the idea for public funding. And Mutual also operates under the regulation of Central Bank of Brazil. Even though these platforms have names that resemble crowdfunding, but they run in peer-to-peer lending basis, as already mentioned by Rodrigo before, which are used loan format, fixed rate of return, pre-establishment end period, and also more accessible source of funding. Some of the startup is protected and secured by the governments, while others still prone to monetary risk. This leads to the pros and cons about peer-to-peer lending. From the lender side, I would like to mention that they have benefit, they have lower interest rate and more accessible source of funding compared to conventional banking and financial institute. As usually, they have lower credit score and also this loan scheme as it is. And for the investor, they can get higher profits. Like I mentioned before, one of the investment in Crowdy, I invest some amount of money and get 80% return in just 6 months. Wow, that's amazing. And also, investor can get their money back in short notice. So it's high liquidity compared to other form of investment. And also, it can be customized loan scheme. For example, in Middle East or some Islamic country, they can tailor the contract and also the loan scheme with Sharia or Islamic law. However, many people see that peer-to-peer lending is competitor for conventional bank, especially in lending scheme. And for the investor, they're afraid that they get exposure to credit risk. Like I mentioned before, usually peer-to-peer lending can accommodate smallholder farmers that cannot receive money from the bank because they get a higher credit score. I mean, low credit rating. And for the investor, if they get share interest, it's not tax-free, subjected to tax by the governments. And also, like One in Africa, some of the peer-to-peer lending platforms is still not regulated by the government yet, or get any insurance protections. So the investor, both of the investor and lender, is prone to monetary risk. Also, it's have time constraint. The time is limited based on the crops harvest time and also the crops yield. It's vary from 1 month until 2 years. Some of them, like mentioned before, have 18 years of contracts, but it's only few of them. So long-term investment is not preferable. Based off these pros and cons, our group propose the possible future development in peer-to-peer lending sectors. And also we propose what are our role as data scientists. So for the next speakers, please tune in.
Thank you for your sharing, Parama. I'll take it next. After learning about some cases of P2P lending in agriculture and some impacts on the conventional banking and financial institutes, we also see that P2P lending in agriculture is much immature at this period, and the core and most difficult problem is the improvement of credit system, where big data science plays an important role. So, how data science works. The first step is collecting data from those parts. The first part is applications, which conclude identity information, income level, work unit, contact person, and so on. These are filled in by the customer when applying for the loan. The second part is activities like consumption capacity, geographical location, shopping preference, or something like that. And this data also can conclude credit history learned from central bank, such as credit card quantity, repayment history, housing loan information. And the last part is some information about customers' deposit, card opening, and other record gained from commercial bank definitely. Next step is we can use some model to combine this data. And later, we can identify a loan person and potential customer so that we can make some corresponding measures. Thus, in this way, the development environment of P2P lending in agriculture will become more and more fair and stable. Now, consider the future, a prosperous future. Look at this picture. A farmer will know more about these coins, even the marketing of these coins, just by using his iPad. In other words, internet plus agricultural equal big opportunities. So where is the future? Because of the low access threshold, the participation of individual farmers and enterprises will expand the information sharing space to promote the upgrading of agricultural industry. The second one is further promotion of agricultural internet system service like cloud farm, rural service station, water, rural goods, and other new service concepts. The third one is popularization of e-commerce in agricultural products marketing because P2P platform provides the fastest speed, the shortest regional connection, and the least links in the circulation of new agricultural products. The last one, I think it is very interesting. Using the convenient and quick function of the internet, it can expand the multiple functions of derivative agriculture, mine the local characteristics and culture of rural areas from the perspective of leisure and entertainment participation experience. So what we talk about is actually a good application, how new technology help to solve the difficulties in specific field. We focus on agriculture field. We found that P2P lending in agriculture solves funding difficulties for farmers in small or medium projects, and we should clarify the difference between P2P lending and crowdfunding. And besides, larger scale provide projects need other channels for funding, such as equity financing, issuing corporate bonds. And the third one is in order to ensure the safety of environment, government or the third party should do the supervision, combining the data science. So we all believe that technology will contribute more to every field, not just on agriculture. The main aim is to solve current problems and help people. That is our main topic and what expect for the new technology. It is believed that big data will have a good affection on our daily life. That's all. Thank you.